Hi, welcome to our latest podcast. I'm Francesca and I head up the payroll department at SeavorChartered. Today I have Graeme, our director and client manager, and we have Charlie, who's part of the accounts team. He's currently training towards his chartered qualification. So today we're going to have a discussion on gold and silver and the tax and VAT implications that some people actually might not be aware of. Before we start anything, I would just like to confirm again, we are not providing investment advice, but what we are going to do is go through things to consider when it comes to the tax and VAT side of things that people might not even be aware they need to be considering. This topic today isn't specifically aimed towards anyone in particular. It's not aimed towards investors, it's not aimed towards jewellers, it's aimed towards people in general who have considered buying and selling gold and silver, or something they're wanting to do or something they have done previously. So in the last 12 months, we've all seen that the value of gold has increased significantly. Recently, I have heard a lot of people saying they're going to go into investing gold because it is not taxable. As we are all aware, that isn't always the case. Sometimes it is and sometimes it isn't. Graeme, would you like to go into that for us?
Yeah, so I suppose certainly in our firm, I've been having a lot more clients asking questions in and about, thinking about buying gold, silver, because they've heard just the phrase, if I buy gold, I hear if I sell it, I don't pay any tax. And I've kind of grimaced and said, it's not quite as straightforward as that. You do need to think about what those rules are, because that could impact on, what you think your return's going to be if it's something that you think is right for you. Also, how you buy it, whether, you're going to buy it on an individual basis, or if you're a company owner, is it something that you're thinking about doing with your company's money? So those sort of things I think we have to think about, when clients are asking questions in and about it.
Yeah, definitely. I mean, I know a lot of people will say, my friend said I don't pay tax on it, but it's always not the case, isn't it? And sometimes you just need to have that further conversation.
Yeah, absolutely.
And get that clarification on what it is, because someone might say they didn't pay tax on it, but they haven't specified what it is in gold that they're selling.
Yeah,
and
absolutely.
That's the main part that we'll get into, isn't it?
Yeah.
So obviously I know I said that gold in value has increased significantly. I know, Charlie, we've had a bit of a discussion about it. Do you want to go in further as to why people are saying this a bit more and the value of the increase?
Mm-hmm. Well, gold in the past 12 months has gone up by almost 60%. Like at the time,
crazy,
right now, we're sat at about £3,700 per ounce of gold.
Yeah.
So it's
shocking when you think how big an ounce is and how much that is now worth. It is crazy.
Yeah, and just how insignificant it can seem and how much value something like that can have.
Yeah.
I think, and just the amount of different forms of gold you can have and how they all have different kind of values and different rules around them.
Yeah. And I suppose it feels like it's been a bit of a hot topic, and I know certainly on some of the socials I watch or what my clients watch, almost all of a sudden, because that value has increased so much over a short space of time, there's been more promotion of it almost, and more clients asking questions about it, considering doing things. And then I suppose when they've realised how expensive gold is, that's maybe made them think about considering other precious metals such as silver, and then that has different rules potentially to what gold is.
Yeah.
Because I think silver at the minute, it can be volatile in terms of price, but if it's, £55 an ounce, something like that, it was £70 at one point, and that's probably increased significantly over the last 12 months.
We've seen jumps of 65%, but we're normally swinging between 10 and 40%. It's really hard to manage. It's really hard to kind of track.
Yeah.
I know that every value of anything, it does always fluctuate up and down. It's making that decision, doing the right things with that decision, and going about everything correctly, isn't it?
I suppose if you've worked in your business, you've made some money the hard way, sort of thing, and then you're thinking about investing in something, you want to go into any sort of investment, I suppose, knowing in and around it, and I suppose understanding the tax consequences of that is really important, which is, I suppose, why we're doing this podcast today, not to give advice on what people should invest in, but if they're thinking about either gold or silver, at least they understand how the tax side of it works, and they're not just listening to the friend down the pub who's told them it's a good idea.
Yeah, definitely. I think that's the main part of it, isn't it? That someone said, I sell my gold and I don't pay tax on it, but again, as I've said earlier, they're not saying what they're selling. It could be a bar, it could be a coin.
And you don't want to get caught out by anything you don't want a nasty letter through the door,
don't.
catching you out.
Definitely, because that is how people get caught out.
Well, it's a regulated area, I suppose, in terms of gold and silver as well. Certainly, if you're going to be selling it to a jeweller's or something like that, I'm assuming if it's high value, they're going to be taking down details and everything like that. And HMRC could be getting access to that sort of information. So, ultimately here, we're going to tell you if you have been doing that sort of thing, you're going to know what's the correct thing to do.
Yeah.
So,
and if you haven't applied the considerations correctly, then you need to look at considering, do you need to go back and apply that correctly?
Well, I suppose even just talking about how complicated it is then. So, if we just talk about gold initially, so if you were going to buy or sell, you'd potentially be bars. There'd be coins as well. And then there could be jewellery, which we'll have a little bit of a discussion about later. But I suppose when they say, there's no tax on if you sell it, that doesn't actually apply to all gold.
No.
So it would apply to coins which are legal tender within the UK.
Yeah.
So a Britannia or a
Sovereigns,
a sovereign coin. Absolutely. If you buy that, you sell it for more money than you bought it for. You don't even have to think about tax because because it's legal UK tender. Whereas however, if you bought a bar of gold and you sell a bar of gold, in theory, you have to be thinking about capital gains tax because if you've made a profit on that sale, then you could be subject to capital gains tax on it.
Yeah. So again, just things to consider, isn't it? And whether you've done it in the past, not consider it. Do you need to look at considering what you have done in the past and again going forward? Because I do think it's just becoming a more popular topic being discussed about and people actually going through with it.
Yeah. Well, I suppose that's with gold, and then coming on to silver. Yeah. I suppose from a capital gains tax point of view, silver is the same. But one thing to consider, I suppose, with silver is the difference that you have in terms of VAT. So buying gold, there's no VAT on buying gold. Yeah, there's no VAT.
Fully VAT exempt.
So whereas if you buy brand new silver, for example, from the Royal Mint, something like that, you actually pay 20% VAT on that purchase. So straight away, you're at a disadvantage if you were to go and sell it the next day, because in theory, you would have lost the money that you've paid in VAT. So
20%.
20% currently. So that's quite a bit just for it to make up. Now, again, no investment advice there, because it could double, triple, but it could also go down. But straight away, the second you've bought it, in theory, we're now 20% worse off because we can't recover the VAT.
Yeah.
And I read the reason why that is because ultimately silver has a lot of industrial uses and it's bought industrial. So that's why the VAT rules differ for that compared to gold.
Yeah. So again, it's just that thing, isn't it? We're not providing investment advice, but we are saying that is VAT on silver.
And you need to factor that into your calculations and whether it's as good is, in terms of your return, you need to be taking that into account.
Yeah, I mean, I know it's certainly something we say every month on these podcasts that you do need to consider every aspect. It's not just the net price of what you're paying, it's what else are you paying, what else do you need to consider, your exemptions when it comes to your capital gains tax. It's not just I've heard it's a hot topic, I'm going to go into it.
Yeah, I know, even then looking at that, you buy new silver, there's VAT on it, but then if you bought some silver from the guy down the road, I suppose that's not going to have VAT on it.
Yeah.
So if you can buy it at the spot price there, actually, would you be better buying second-hand silver than you would brand new silver? But, the practicalities of all that sort of side of things, is it real? Making sure it's not fake and all the things you have to do with that. Yes, I wouldn't know how to do that. But if you're buying it from the Royal Mint, I suppose you're going to have more reassurance it is silver and the purity, rather than just buying it from someone down the road or from someone at the pub who's selling silver that they own.
Yeah, again, something that we often say every month is going through the safe route, the safe option, as opposed to taking that risk that you maybe don't even need to be taking to avoid something when you don't actually maybe need to avoid it.
Yeah, no, absolutely.
Because there are ways with the VAT, because you don't always have to pay that 20% VAT, providing you can buy the gold or buy the silver and you get it delivered to an offshore or a vaulting service like Switzerland or somewhere like that.
Yeah, so I suppose what we're saying there is if you buy it and it doesn't come into the UK and they store it for you, then actually you're not going to pay UK VAT because it's not in the UK, it's offshore. But I suppose, me, not something necessarily that I've invested in, but if you're going to buy that and you're buying it for reassurance that, to protect against the value of money decreasing, or it's because you've tangibly got it in your hand, all of a sudden paying somebody else to store it for you.
You can't even see it.
If something goes crazily wrong in the world, is it still going to be there? And
are you going to be able to
are
get
you
your
actually
money
going to be
out
able
of
to
it?
get it? Yeah,
Exactly.
absolutely. So, and there's then storage costs and things like that to that. So you've got to consider all those aspects of it as well,
Yeah.
haven't you?
Again, it's the risk reward, isn't
Yeah,
it? Of what's the
absolutely.
risk of buying it offshore, so you're avoiding something, but then actually you're not seeing it in your hands,
Yeah.
in your home, or
And
etc.
another thing to mention as well is, I suppose, a lot of clients, you know, if they've got their own company and they've got, I'm going to say, spare cash, it might actually be trapped in the company as well, and it isn't actually their personal money to be spending on things. Because when I say trapped, as in they take the money out of the limited company, but now they've got to pay taxes on that, so they leave it in the limited company to avoid paying higher rates of taxes. Well, if they could get their company also to buy gold and silver, and yes, absolutely, somebody's trading company could invest and buy gold and silver, but you're not going to get any immediate corporation tax deduction for it.
No.
If you incur VAT on the silver, you're not going to be able to claim the VAT back. And then when you sell it, if you sell it for more than you've paid for it, you've got to pay corporation tax as well on any gain in the value of the gold or silver as well. So certainly if the guy down the pub says, buy gold because you don't pay any tax on it if you make anything, that's just absolutely, it's just not true.
Yeah.
Unless you're pretty much buying UK legal tender gold in certain coins.
And unless you have a really good understanding of what you're doing, it's just a really risky gamble, isn't it?
Well, potentially, I suppose, isn't it? It is. And, well, like we said about the price of gold, you know, a small amount and it's worth a lot. And if you're storing that at home, you've got things like the storage of it, the insurance of it. You know, you certainly wouldn't want to lose it, but I don't think many people would lose a £3,500 gold coin, but you never know, do you? So
I know, Graeme, you touched on there slightly with the company buying it. Buying the gold, would we be able to maybe go into that a bit further? I know you said you don't get the corporation tax, relief on it and the VAT and stuff. Would you be able to go into a little bit further? What you don't get, what you do get and why?
Yeah, so, well, I suppose, let's say you bought a gold sovereign individually, there's no capital gains tax on that. But if you bought that in your company and it went up in value, the profit that you've made by it going up in value, you would pay corporation tax on that increase in value.
Okay.
Because there's no sort of exemption for companies like there is for an individual
Exactly.
there. So I suppose almost if someone was going to buy it as a company, they're probably thinking, well, I'm buying it as a company because that's where my money's actually locked in. And I don't, if they're investing in it, I want to kind of take that risk, but use where my money's at. But actually, if you sell that, you're going to be paying corporation tax on it. But some people might think as well, I've got some money in my company, I'll buy some gold and I'll save tax on it. But you won't. All it's going to do is, rather than cash sitting on your bank on your balance sheet, you're going to have the value sat on your balance sheet in gold.
Yeah.
Right.
There's no tax deduction in the year of purchase if you think of it like that. Whereas if you bought a van, you get a tax deduction in the year of purchase. For buying a gold, you don't.
So that's because it's classed as an investment rather than
rather than asset. Yeah, if you think of it like that.
Yeah. Oh, that's very grateful. Very grateful for your advice there, And now I know we've talked on companies buying it, individuals buying it, but what we've mainly talked about is gold and silver. Would we be able to have a discussion on buying and selling jewellery? Because I would say in general, a lot more people would probably look to buying and selling jewellery that they've got sitting in the homes, in the jewellery boxes, as opposed to expensive gold coins.
Well, I suppose when we talk about jewellery as well, we talk of jewellery that's primarily gold or silver jewellery, you know, and it could be because all of a sudden they bought some gold jewellery years ago, and then all of a sudden they realise now, they watch this podcast and they're like, wow, gold prices jumped up that much. How much is this bit of jewellery worth? And I suppose there's rules for chattels in terms of how that's would be taxed. And ultimately, if you sold your jewellery, if you sell it, it cost and you sell it for less than £6,000, nothing to worry about from a capital gains tax point of view. But actually, if you sell it in excess of £6,000, you've actually got to consider if there's capital gains tax to pay on the sale of that gold or silver jewellery. And people might not even appreciate that. So if you sell it for more than what you've bought it for and it's over £6,000, you have to consider capital gains tax. I don't know if you want to mention about like the relief that an individual can earn in a tax year before they'd pay any capital gains tax.
Because every single year an individual gets £3,000 of annual exemption allowance, which does come in quite handy if you are doing something, making a disposal every single year. And I mean, with the government changing the capital gains tax rates midway through the year last year, up from 10% to 18% and 20% to 24% for basic rate and higher rate respectively, then it can be quite a good relief. It can be quite handy.
It helps, doesn't it? And I suppose, you're almost thinking if you don't sell anything else from a capital gains tax perspective, I suppose almost if you sold it for 9,000, you're not going to have any capital gains tax to pay because there's the £6,000 exemption, then your £3,000 annual exemption as well. But, you know, ultimately it's just something to consider because I think a lot of people, if they sold privately owned jewellery, wouldn't even be thinking that they could have tax to pay.
No.
And historically, maybe the value of that jewellery, if it's in gold, you wouldn't have had to worry about it. But now because the price has jumped up so much, it's potentially actually worth significantly more than maybe they thought it was going to be. But selling it, they have to consider if they've got tax to pay.
Yeah, I would definitely say I agree with you, Graeme, where you're saying that previously a lot of people wouldn't have even considered that they would have to pay a tax on selling jewellery, but obviously because the value of gold's increased, no one probably predicted it would go up this much. That actually it is coming more of a day-to-day thought for people who are generally selling jewellery that never really would have considered.
Yeah, absolutely, yeah. So just, I suppose, just being aware that if gold or silver is something that you're considering buying, almost as an investment, and I suppose like any investment, whether it was property, UK, abroad, you've always got to consider the tax circumstances or the tax is in and around that as well, because that'll help determine whether it's actually a good investment or not. Because the last thing you want to do is think, oh, that's a great investment, I'll make a great return, and then actually find after taxes there's no return or it's nowhere near as good as you thought it was, meaning another type of investment would actually be right for you. So
yeah. I mean, I know it's certainly something I feel like we do say every month, but you do need to consider all your options and what you're doing with your options and how they are going to play out. Sometimes what seems like the easiest route isn't always the easiest route, and it's not always the route for you. Would you both agree?
Definitely. Yeah, I feel like it's really important to do your research, speak to the correct people rather than just listening to somebody you've met on the street or somebody who has a rough idea, but it's definitely...
And it's not a small investment, you know. I
No,
suppose
it's not.
Buying a little bit of gold is not a small investment.
Not anymore, no.
Silver prices, I suppose, yes, they're more affordable. But then if you didn't know that aspect about the VAT, straight away, the return is potentially wouldn't have been anywhere near as good as you think it's going to be.
You're just losing out.
Potentially missing out on 20% if you weren't aware of that.
Yeah, and then if you didn't know that not all gold is just exempt from capital gains tax, you could decide to invest in a bar rather than the UK legal tender coins. And then you're paying capital gains tax, whereas if you bought that in coins, you wouldn't. So that's a massive difference. If you think 24% coming out of any gain that you could make. And I think that there probably is a small difference. I haven't looked into it in too much detail, but I'd basically be on the weight of what those coins or the bar is. Yeah. The fact that they're coins, probably, I could be told wrong there, isn't too much difference in comparison to the actual weight of the gold.
Yes.
So, you know, if you were saying, well, which one should I buy as an investment as an individual, you would say, well, maybe the coins is the right route to go because you're not going to pay any capital gains tax on it if the value goes up.
Yeah, I mean, certainly us in our industry, we are aware of these rules that are surrounding it in terms of things like the annual exemptions and the £6,000 exemption. The general person might not be aware of that. So again, just that thing of finding the right person to speak to who does have the facts, not just that I heard this down the pub.
Yeah. And
there's always a lot of considerations for capital gains tax. You have to think about like the cost at the start, how much you bought it for, and if that was a long time ago, that's where stuff gets really complicated.
You know, in an ideal world, you'll keep the documentation, all of that, but it's, you know, often if you've had things for a long time that, you know, you haven't necessarily got the documentation.
It gets lost, it gets trashed.
Yeah. So I suppose as well, even that, we mentioned that Chattel's amount, for example, you sell some gold jewellery under £6,000, nothing to worry about. If it goes over and above that, you know, the rules, actually the more complex type rules to limit the gain and things like that. We won't go into it, but again, it's basically just saying if it's over 6,000 and you sell it for over that, think, oh, I might have some tax to pay. I maybe just need to speak to somebody to make sure I'm doing what I should be doing.
Yeah, and there's always no harm having a conversation. You might not need to do anything at the end of it, but you will have that clarity.
Yeah, absolutely. Yeah.
Well, thank you both for coming in. As always, very informative. I think the main thing to take from today is that tax and VAT treatment differentiates on what you're choosing to buy, what you're choosing to sell, and it is never a rushed decision to make. Again, I would just like to reiterate, whatever we have discussed today is not to be taken as investment advice, and it's just advice to be taken in and around tax and VAT implications on buying and selling gold and silver. And obviously, if anyone would like any further confirmation or would like to speak to any of the team, please feel free to contact me.